And for them, investing in a digital offering, whether it's a cloud mining contract or a Hashrate token, may be the easiest way for them to gain exposure. And they don't want to get their hands dirty with finding like random sites in Alberta or Texas and dealing with the manufacturers and the brokers. They just want access to Hashrate. And so I think it's a very different group of people looking for one versus the other. So I would suggest anyone who's developed an expertise in mining, like continue to do what you do, get cheap electricity, buy machines at a low capex amount, and maximize your revenue. But for everyone else that wants access to Hashrate markets, I think it's an interesting avenue, investing through some of these contracts. And it just requires the right amount of due diligence, assessing counterparty risk, assessing the potential return based on your opportunity cost. And I think all those things can be navigated, and there's still money to be made on both sides, the physical side as well as the digital side. And I would just say, like, a quick note on, investing on the digital side. I used to invest in like oil ETFs. I wasn't very good at it, lost a lot of money, but I've actually like never been to like an oil refinery or seen a barrel of oil in production. But I was pretty comfortable investing in this, cash settled derivative instrument on oil. And so I think the same is going to be for compute power and hash rate. Eventually people, are going to be comfortable investing in compute power as a commodity. And maybe the biggest ones do visit mining farms and understand and walk around the farms, but a lot of them will never have seen an ASIC in their life. And they're still understand compute power as a commodity and are willing to invest just based on that.
Yeah, that makes perfect sense. What I'm trying to simplify is how you explain hash rate being a commodity, right? Because at this point, when you're entering into a mining contract, or when you're mining for yourself, it's like a programmable savings account, because you're ultimately putting money in one place, and it's just generating income similar to a savings account or a fixed deposit at a bank. It's just much more riskier, and it has different methods of achieving those earnings. But how do you explain hash rate being a commodity today, and why is that true, right? And now we can, I understand Bitcoin as a commodity, right? Because it's similar to it's digital mining. So if you're mining for gold, or if you're mining for any other commodity or natural resource, you're using equipment or heavy duty equipment to get that resource out of the ground. Similar in this case, you're using computing equipment to generate Bitcoin, and your hash rate now, you're saying, it could also be a commodity. Can you just give me more details on that? Because it seems like something that that could also be tokenized. And you said you can have hash rate tokens, right? So these two concepts are something that I believe you have some things up your sleeves for us with regards to tokenizing and hash rate as a commodity.
Yeah, I think there's a lot of like terms out there, and a lot of people think that like these ASICs are producing Bitcoin, which is like a final output of a lot of the compute power. But at the end of the day, what an ASIC, a specialized Bitcoin miner, is producing is the SHA-256 hashing algorithm. So what the machine is doing is it's basically running through this trapdoor function, SHA-256, pretty much a brute force function where it just has to guess through numbers and eventually finds the right hash, and then that hash is used to validate a block and add it to the chain. But so the machines are actually producing hash rate compute power. That compute power can be used for a variety of different things, mostly used for mining Bitcoin, but can also be used to mine different chains like Digibyte, Bitcoin Cash, Terracoin, Peercoin, etc. So there's different use cases for that hash rate. The other really interesting part about hash rate is that people have different values of that hash rate depending on who you are. So let's take you and I for an example. You have a certain value of that hash rate, which is how much can you sell it to the pool for. So let's say the pool is buying it for $98 right now per terahash or per petahash. And but I'm the mining pool. I can actually go and mine that block. the value of hash rate for me is actually $100. And so that's why mining pools basically buy hash rate from miners at a slight discount, because they can earn the spread between how much they're buying it for and their expected value. So hash rate itself has different value depending on who you are and how you can utilize it. It's not constant. And then you can start getting into more hypotheticals where, going back to why Bitcoin and proof of work was invented was for the consensus mechanism, which basically means that if you control hash rate, you control consensus on the network. And so having that control actually may be more valuable than the coins it produces later in life. So, if the US government, for example, wants a certain control over the Bitcoin network, they may be willing to pay a premium on hash rate just to achieve that. Or, maybe a private individual wants to make sure that their blocks or their transactions are included in the blockchain, or they get clean coins from the blockchain. And so they're willing to pay, a bit more for hash rate than someone who doesn't care about that. And so you start to see kind of these different levels of buyers of hash rate, and you can see why hash rate will trade kind of as a commodity. And so miners being the producers and sellers, and then buyers being whoever wants to own that control of hash rate or use it for its output. Hash rate can be
now that I bought a hash rate, if now that as an investor or as a buyer of hash rate, I bought the hash rate, right? What did I actually? I bought basically computing power that will allow me to hash algorithms or solve these hash transactions that are transaction hashes that are taking place on the Bitcoin network. So just try to explain to us, if someone bought hash rate, what can they do with it today?
Yeah. And today, I guess the majority of hash rate is bought by mining pools. And mining pools are specialized companies that own the technology to be able to build blocks, include transactions, and then submit that to the network. And so on a daily basis right now, my company buys about 750 petahash worth of hash rate from miners. And so we use that hash rate to then go build blocks and submit it to the network and try and earn a spread on how much we bought it for versus how much we're going to make from it. But kind of like in the new ecosystem where hash rate's more accessible, physically delivered hash rate, other miners will join in, and basically buyers can buy that hash rate and direct it wherever they want. Maybe they run their own mining pool, maybe they transfer it to a different mining pool and just try and arbitrage the amount that they bought it for. But whatever the use case is, I think it's either comes down to like economic or philosophical. Like at one point they want to, on the first point, they want to make money, whether it's arbitraging it to the blockchain or arbitraging it to another pool. On the second point, maybe they want to own some portion of the network and control the consensus. So it's not an easy asset to manage, and that's why there's only a few people doing it today in the current mining pool ecosystem. But I think in the future, as it becomes more accessible, you'll start to see various people interacting with hash rate on the buy side and using it as an asset. That's on the kind of the physical delivery side, but there's the whole other kind of cash settled virtual hash rate tokens that is also interesting.
Interesting. So virtual hash rate tokens are a result of basically streamlining that market that you just discussed, that you just mentioned with regards to buying hash rate, and instead of just buying hash rate, you're buying tokens that are backed by hash rate.
Exactly, yeah. And it goes down to that first point on economics. If you're only in it for the economics, then it doesn't really matter if the hash rate is physical or virtual, being cash settled. At the end of the day, you're just trying to make money on the arbitrage, or you think there's a mispricing in the market. So for example, like Poolin has a hash rate token right now. It's trading at like just under $110 a terahash. You may think that's underpriced and that a terahash is actually worth something higher than that. So you could go to Poolin's token on Uniswap and buy that and invest in virtual hash rate per se.
Okay. Interesting. So how active is this hash rate market, the token hash rate? I mean, is there a market cap out there that people can have reference to, or?
Yeah, so these markets were only started 3 weeks ago for context. It started with Binance launching their token, BTC ST. And then Poolin shortly followed with BTC 35A. Don't ask me why they named it that, but those are the two coins that came about 3 weeks ago. Both have similar-ish functions, although some differences, but both are backed by physical hash rate. And if you buy their token, you own basically the output of that hash rate, and you get paid out in either Bitcoin or wrapped Bitcoin
So there's
for
a
the output
yield
of
on
that hash
that.
rate.
So that hash rate token is generating income.
Exactly, yeah. So in the case of Poolin's token, you basically buy a terahash of hash rate, and then if you hold it and you stake it on their site, you gain the mining revenue that would be associated with 1 terahash worth of mining power. And to your question on like how widely is it traded, I would look at it more like from a volume perspective. I think within the first few days, Poolin's volume hit 6 million, and then they got all the way up to $25 million in daily volume,
It's not
which
bad.
yeah, in 3 weeks, I mean, it's not bad at all. Obviously, we want to see the market develop way beyond 25 million in daily volume,
Yeah.
but I think from a starting point, it's pretty good.
I think it will, because you have all these, again, large mining corporations that are publicly listed in the US and Canada, and eventually in different parts of the world, that are accumulating significant amount of hash rates and significant amount of ASIC that are yet to be delivered within the next 2-3 quarters. So it seems like the logical step forward for large mining corporations to take, because ultimately at this point they're mining for themselves, while at the same time being 100% exposed to just the price of Bitcoin.
Yeah, that's a really good point. And a couple of these public mining companies are shareholders in my company, as well as I talk with a lot of them on a daily basis. And I would say that all of them are interested in derivative instruments. Right now, a lot of the mining margins are like 85% plus, which is great margins. But, rewind 2 years ago, and the public mining space wasn't looking so hot. A lot of these companies were trading in the tens of millions for large mining operations. So I think a lot of them are still aware that the mining industry could flip. Like you said, a lot of hash rates coming online end of year, and potentially Bitcoin, who knows where it goes, but there is the potential for them to lose out on margin. So the ability to sell forward hash rate, I think, is going to be incredibly important for them and top of mind, especially as they become more sophisticated themselves and more senior executives join their ranks. And so I think all of them are looking at the space and hopeful that solid derivatives will come out that they can utilize for their operations, similar to oil and gas companies or gold companies or any commodity business. Right now, the hash rate tokens, I would say, are still pretty new and unregulated. So I don't foresee a lot of public North American institutional mining companies interacting with those types of instruments. But I think it's a really good starting point. So there's a lot to be improved on the current hash rate tokens, but I think like the fact that Binance and Poolin got them to market, we can now iterate on those ideas and build them, whether it's them themselves or other companies. I think is great because it just speeds up the development of these products overall. And eventually, I think we'll start to get towards products that can be really tailored towards, the North American public mining companies, and offer them a solution that can hedge out their operations, but also be compliant and lower their counterparty risk.
Yeah, 100%. And all this, leads me to try to figure out how in the world do you value hash rate, right? I mean, okay, the understanding that hash rate is produced as a result of energizing computing equipment, which is the ASICs that are used to mine Bitcoin. So they produce hash rate. All that hash rate is being, because ultimately the value of anything is mainly supply and demand, right? And given the increase in user activity on all these cryptocurrency networks, and the network effect that is playing out is basically reflecting on the value of the cryptocurrency market in general. But those cryptocurrencies that are reliant on ASICs or computing equipment that produce hash rate to continue running those networks will always need hash rate ultimately the demand will indirectly increase